since you were talking about the COMEX in this whole facade they're putting on, do you, and I've actually I've covered a lot of Ted Butler's work on this. Do you think the COMEX could ever freeze or collapse, and what would that look like?
Well, I think the numbers would say that they absolutely could, but I think before it happens, they'll do the same thing that they did to the Hunt brothers. They'll change the rules. They'll
Mm-hmm.
enact force majeure. They'll raise the margin limits to the moon. They won't allow delivery, which is the
Yeah.
same thing as default. And at that moment, if I were the Russians, that's the minute I'd turn up the heat with the Moscow exchange, and I would start to raise the bid offer price for gold and silver substantially, put gold at 2,500 an ounce, put silver at $50 an ounce, and immediately you would see arbitrage. Everything would flow eastward. It would expose the COMEX for being a sham. That if you're not able to take delivery, then what
Right.
does the market really mean? And when you realize that, many times the amount of contracts trade as our bars backing it, it's not right. It shouldn't be
Yeah.
that way. It shouldn't be a casino. This is
Right.
not what the exchanges were designed for. The exchanges were designed for entities to offset risk, and instead it's being dominated by hedge funds and commercial banks that are speculating using, rehypothecated many times over contracts of gold and silver that if they stand for delivery, that moment would happen. I mean, you could see that just by the open interest leading up into delivery months. Many times the number of contracts that could stand for delivery are far greater than the registered category has available.
Yeah.
So somehow mysteriously it always is pared down leading up to that amount. But nonetheless, yeah, just in reality, it could happen. But look, the banks are the ones that are all members of the CME group. They won't eat themselves. But I think the moving to force majeure, not allowing deliveries would be the same thing as a default. So yes, it could happen. I think there are people out there. Well, I won't mention any names, but they'll tell you that metals market's not suppressed or manipulated. And I think there's enough information out there and admissions by JP Morgan, and they're fine, and all of the empirical evidence that indeed the markets are controlled. Okay.
Yeah.
And very often they use whoever they are, the counterintuitive nature of the price action of the metals market to throw people off the trail. In other words, why hasn't gold gone to the moon and silver gone to the moon in
Right.
the light of chaos geopolitically, uncertainty politically, 40-year high inflation, and all? And that's a valid point. It's fair. The suppression of the metals market, and you can see it if you look closely at the concentrated position. Four banks holding the largest concentrated position on the silver market on COMEX, more so than any commodity traded on the exchange. And
Yeah.
so it's very obvious that the market
Yep.
is controlled, and they will use the suppression to throw people off the
Yep.
scent when it should be going up. But like I've been saying, what betrays the metals price is the amount of deliveries off of places like the London Metal Exchange, the backdooring out of the ETFs, the deliveries off of COMEX. In other words, the sophisticated money who's closest to the information is using price suppression to privately and
Yep.
quietly accumulate the physical. So they suppress the price with leverage. They gobble up the physical because people are only focusing on price and not looking at fundamentals the way that you and I do, because every day we're digging for information and we see the fundamentals. They don't. And it's of no fault to them, really.
Yep.
I guess you either go down this path or you don't. And if you don't, you see the price and be like, well, what are they talking
Right.
about? The price isn't
Right.
doing anything. But
Right.
if you look closely, you see the most well-funded, well-informed, most sophisticated traders on the planet gobbling up massive shares of physical metal and using price suppression and rhetoric to do so. And they'll paper that over too to get out. And I think that's, one of the things that we're seeing, to me, that is most telling about where things ultimately will end up.
Yeah. Price is the greatest tool of misdirection.
The Commitment of Traders report is way behind, right? Because of that hack on this Irish company that provides the feed. But the commitment of traders, just to give you an idea of how they suppress things and what it really is like, the Commitment of Traders report that the COMEX produces each week was delayed, or they haven't issued. They just started issuing it again, going back to, I don't know, early January when this hack happened. And the February 7th Commitment of Traders report came out last week. And it showed huge improvements in the commercial net short positions in both gold and silver. I just want people to understand something. Currently in the registered category, because JP Morgan put 7 million ounces into it last week, and I believe that is specifically because one of their short positions is demanding delivery. That's the only thing that I can think of why they would have moved it into registered. But I believe that's what's going to happen. They know that a delivery is coming here. But even still, there was 32 million. Now there's 39 million ounces in the registered category. Those are the bars that back the contracts that could be delivered. On the February 7th commitment to traders, I think what they've been doing is they hoodwink once again the managed money into going short, and they drive the price down. And on February 7th report, it showed that the commercial traders net short position fell by 10,755 COMEX contracts at 5,000 ounces a contract, or 53.78 million ounces they covered. So commercial banks let the price get driven down, or they push the price down. The managed money drives it down, taking the other side of that. And then they come in and cover 54 million ounces worth of silver, almost twice what is held in the registered category. This is manipulation. You have 4 to 8 banks that their short positions are the sole determinant factor right now of the metals market. And then in gold, the commercial net short position fell by 27,554 100-ounce contracts, or 2.755 million ounces. So the commercial banks are starting to cover. Now, is this the beginning of a trend? Do they realize that being short in a market like this, when the world is draining the exchanges and the fundamentals are growing by the day, is a stupid proposition, is a very risky proposition? Maybe. Who's going to be left holding the bag? It'll be the hedge funds, manage money. Because when these guys are covering those contracts, they're going long. They're buying those from the managed money who's taking the opposite side. So I just think that these are very interesting times, and the market is suppressed. And as I've often said, and you just mentioned, price is the greatest tool of misdirection. And it allows either acquisition or pickpocketing by the commercial banks or the sophisticated money, because no one looks at anything besides the price. You got to really look hard and lift up the hood and see what's going on underneath to make that proper decision. But yeah, I think hopefully, and in particular, we should talk about what's going on with the states. Maybe there will be some information, or some people will start to finally wake up, largely because what's going on with the states and their changing attitude towards metal. Maybe people start to wake up and jump in on the investment side, where currently less than 1%, the figure is 0.5% allocation to metals in this entire country in all assets. So, I think I take optimism in seeing that the price is low, but the biggest money in the world is front running that by positioning inside that environment of low price and poor rhetoric. And they're going to position until they're fully loaded up on it and de-dollarize, and then they're going to let the price run.
Yeah. That's the hardest thing to explain to people is, if they are looking to get it like let's say I was talking to my friend or, my uncle or something, and I was talking about silver. He would mention, well, gold and silver, they don't really do anything. They haven't performed well. And it's not even about that. It's not even about that. It's not trying to get rich. That is what makes you rich. That's what your security is financially. And if you're trying to look at it from, oh, well, silver's still 20 something dollars. What if in 20 years it's still $20? It's like, that's not even the point. That's not the point at all. And I feel like a lot of people don't understand that is looking at silver as money and not just trying to make more money.